Good morning, everyone. Good morning, Doc. Today I am going to discuss about the insurance market. But before that, I am going to introduce myself. I am Mary Grace G. Panoy. I am a senior high school teacher in the Department of Education, and I lived here in Natulungan, Kibawi, Bukidnon. Okay, so insurance market is a very interesting topic because insurance reduces the burden of risk of future uncertainties. But before going into details, let us quickly visit its history. Okay, so during the pre-Hispanic era, the concept of insurance is non-existent. Here in the Philippines, I am talking about Philippines. So Filipinos that time was just relying on hunting and gathering of food for their subsistence. Okay, so when the Spaniards came and colonized our country, they introduced the concept of insurance, and that is Lloyd's of London. Okay, and Lloyd's of London appointed Strackman, Moray and Co. as its representative in the country. Okay, at this point, um, Strackman, Moray and Co. is the resident agent of Lloyd's of London. Why? Because they represent the non-resident insurance company, which is Lloyd's of London. Okay? So Lloyd's of London was founded by Edward Lloyd in 1688. Okay? So I have read an article of uh, Inquirer.net that Lloyd's of London insured the Titanic. Okay, so as years goes by, in 1889, loss and insurance was introduced as it is stipulated in the Spanish Civil Code. And in 1898, the first the first life insurance was introduced in the entry of Sun Life Assurance of Canada. Okay, and it was followed by 1910, the establishment of Insular Life Assurance Corporation Limited. So as you notice no, sa una, they are using the word assurance, but now we are using insurance. Okay. So as of 2013, a Republic Act 1067, known as the Amended Insurance Code, was signed by Benigno Aquino III. This one of its amendments. This extends the period of validity of the licenses of insurers, agents, brokers from 1 year to 3 years. Okay. Now, let's talk about insurance market. So, insurance market is simply the buying and selling of insurance. So, this could involve physical building, or this can be done through internet, through online. Consumers like us, it can be individual or group, may buy insurance by paying a premium to the insurer for the risk management, offering coverage for specific risk. Okay, so what is then an insurance? Okay, on the next slide. Insurance is a contract that transfers the risk of a financial loss from an individual. So this individual or business, they are called the insured, to an insurance company. Okay, so it is a way to manage risk. Okay, so when you buy insurance, you purchase protection against unexpected financial loss, accidents, death, damage, fire. Now there are lots of unexpected loss in the future. So it is best to buy insurance. So as insurance industries evolve, many insurance companies nowadays are offering both protection insurance as well as investment, okay, financial planning and retirement planning. Okay, now this is the flow of this is a typical structure of an insurance uh, company. Okay, so an insured will pay uh, premiums. Okay, so in exchange of the insurance coverage, the policy holder pays the insurer a premium. Okay, look at this. Okay, the policyholder 1, policyholder 2, policyholder 3, policyholder 4 pays premium to the insurance company. Okay, in which the insurance company manages the fund. Okay, which they can invest to earn profit for the company until they are needed to pay out claims. Okay, so these funds are then transferred into investment portfolio like the stocks, the bonds. Okay, so when uncertainty happens, an accident, so the policyholder can get compensation in a form of claim from the insurance company. Okay, now we go to the or who are the people behind insurance companies. Okay, so first is the insurance commissioner. Our present insurance commissioner today is attorney Dennis B. Luna. He is the head of office in the insurance commission. Okay, then what is the role of the insurance commission? It regulates insurance companies. And insurance commission is under the Department of Finance. Okay. So next is the insurance agents. Insurance agents sell and negotiate insurance that match the need of the clients. Okay, they are selling. Okay, insurance agents are good with customer service and how they sell their products, how they persuade, no, so that the clients would buy a policy. Okay. Next is the resident agent. Resident agents is generally tasked to receive notices on behalf of a non-resident entity, the foreign insurance company. So, as I've been telling a while ago in the history, that the Strackman, Mori, and Co. was the resident agents of the Lloyds of London. Okay. Next is the underwriters. Okay, underwriters are professionals who evaluate the risk involved in insuring people or asset. They establish pricing for accepted risk. Okay, they establish pricing for premium. Okay, now for example, no, sa underwriters, for example, underwriter for health insurance, they would evaluate the health background of the client. Is this person a smoker? What is his age, current illness, family history, and so on. Okay, so that is underwriters. They evaluate the risk. Okay, next is the actuaries. Analyzes financial risk, uses mathematical, statistical, and financial modeling to determine the chances that something will happen. Okay, so for example of um, actuaries, no, uh, An actuary that works for a car insurance, for example, would be interested in how likely a 17-year-old male would get a car accident. Okay, so they use data from the past events to make predictions about future events. So they use advanced statistical tools in doing that. Okay, so they compile statistical data, the mortality rate, the estimates, the probability of any risk. So that is the job of the actuaries. Okay, next is the adjusters or the claim adjuster. Review facts of each case and determine the claim settlement. Okay, so in case of car insurance, no, in case the car meets an accident, so the adjusters would inspect the damage, look at the police report, talk to witness, and so on, because they are the ones to know the facts for to determine the claim. Okay. Next is the insurance broker contracts himself for multiple companies, look for insurance product that fit their clients. Now we are often confused about the difference between insurance agents and the insurance broker. Now when we say insurance agents, they represent a single insurance company, while the insurance broker they contracts for multiple companies. So that is one of their difference. Now we go to the basic concepts and principles of insurance. Okay, so when we say insured, this is a person covered by an insurance. It can be individual or it can be a group. Okay, group of employees. Okay, while the insurer is a company who issues an insurance policy, provide coverage in the form of financial compensation. So insurer is the insurance company. Okay? An insurance policy, it is a written instrument in which a contract of insurance set forth. So it contains this document contains agreement, the price of the policy, exclusions, inclusions, general provisions, terms and conditions, and so on. Okay. Now, it is best to know, no, if we are planning to invest or to buy insurance policy, it is best to know uh, who are the best insurance company in the Philippines. So we have here the Manulife, the Pioneer, the BDO Life, Sun Life, Coco Life, Pro Life, Alliance PNB, Sun Life, Philam Life, AXA, Commonwealth. Okay, so these are the companies, the best companies to buy or to invest with. Okay. So we have also here the top insurance companies in the Philippines as of 2017. So it is important also to note that before acquiring or before buying an insurance, you also have to study these companies on their performance. No, are they financially healthy, or are they financially stable, or they have losses or what. So it is important to also to be updated with the current top companies. Okay, so it is best to invest in this type of companies. Now we go to the categories of insurance. We have the non-life insurance and the life insurance. Now, first we are going to talk about the non-life insurance. So we are very familiar with this, and I am not going to talk with this longer. Okay, so we are very familiar. No, most of us have cars, motorcycles, and all. So we are very familiar with the car insurance. Who are the providers of this? Um, bike insurance, fire insurance in case our house burned with the fire, the home insurance, travel insurance in case you travel and whatever happens there, then you are insured, and then marine insurance, commercial insurance, and indemnity insurance. Now, in this eight type of non-life insurance, um, indemnity insurance is not that familiar for me or for us. So when we say indemnity insurance, these are most availed by lawyers, doctors, financial advisors, or those people who are providing service. Okay, why? Why are they going to purchase, or they have a need to purchase this kind of insurance? Because it protects the professionals in case that one of their advices or one of their services did not work as expected. So that is why they are buying indemnity insurance. Now we go to the other categories of insurance, the life insurance. Okay. So life insurance, we have child plans, annuity plans, unit link, term, whole life, endowment, money back. Okay, we are going to touch that very quickly. So the child insurance, that is this offers this child insurance offers financial safety to your child's dream and goals. Okay, so it is very easy to understand. Now we go to the annuity plans. So annuity plans, this is sometimes called a retirement plan, no? Guaranteed income in retirement. So you pay certain amount of money in exchange of income paid out in a regular basis of your choice. So it can be monthly, it can be quarterly, it depends on your choice. Okay. Next is the unit link insurance policy. So this unit link insurance company policy give the investor both, take note, both insurance as well as investment in a single integrated plan. Okay? So a certain part of your premium pays the insurance coverage, while the remaining is invested in the types of bonds or investment. Okay, now we go to the term insurance. So term insurance, as the term implies, no, it has a specific period up to a certain age covered. Okay, so it is renewable. All right? So kung hindi ka na nagbayad, hindi ka na covered. Okay. So protection is only available for the term of the policies. Okay? Now we go to the whole life insurance. So it covers up to age 100, whole life as it said. Okay? So last your entire life. So it accrues cash values that you can withdraw while still alive. Okay. Now we go to the endowment policy. It is also commonly known as savings plan. Okay. So premiums is guaranteed to be returned upon termination and end of term of the policy. Okay. Now we go to the money back plan. So I have here an example, the St. Peter, specifically St. Andrew plan. Okay. So this there is a return of premium. Okay, money back. So for example, in St. Peter plan, St. Andrew plan, so 5 years to pay, and if you are done paying the 5 years, so there is an additional 5 years maturity period. Okay, a total of 10 years. And after that, they will do the money back to the plan holder. Okay. Now, we go to the classification of the insurance companies uh, in the Philippines or in we go to the classification of insurance companies. First is the stock insurance. It is a corporation owned by its stockholders. Okay, owned by its stockholders. Outside shareholders are the co-owners of the firm, and the policyholders are not entitled to dividends. Okay, so the stockholders here are called investor. So for example, the Coco Life. Okay, the other classification is the mutual insurance. Is a corporation owned exclusively by the policyholders with a right to vote on the board of directors. Generally, companies are managed and assets are held for the benefit and protection of the policyholders and their beneficiaries. Okay, so sa stock insurance, their profit or their objective that they will make profit and the benefits of those goes to the stockholders, while in the mutual insurance the assets are held for the benefit and protection of policy holders, of course with their beneficiaries. So they are called policy holders. So example is Sun Life. Okay, so it is very important then to know how to measure profitability of the insurance. So it is very imperative to know this before investing or before purchasing insurance to those companies, no? So for example, this is the formula no, of the loss ratio of the insurance. So total incurred losses. This includes expenses. Uh, this includes the commissions and fees. So the total of that divided by the total collected premiums, and that and the result is your loss ratio. For example, your total incurred losses is 5 million. Okay, and your total collected premiums is just 3 million. So when you divide the 5 million to 3 million, the result is 1.67. Okay, so note that if the loss ratio is above 1 or 100%, then the insurance company is unprofitable. Okay, so it is really very important to know about this before investing to the insurance companies. Okay, now we go to the how do commissions work. Okay, so it is very interesting that I have read in the inquirer.net know that the most successful agents of Pro Life UK earned an annual income of as much as 2 million. Okay? So, commissions earned from selling insurance ranges from 30 to 40% of the first year premiums. Of course, it varies uh, according to the plan or according to the companies, or how generous the company is to their agents. Okay. So take a look at this first table. The plan here is the term. Okay, the term. Um, so notice that the paying term is 15 years, and in the first year, the agent can have 25 to 35% of the total premium mo na iyahang makomisyon. Okay, and on the second to third year, it will go down, okay, to 7.5%. And on the fourth year, it will go down pagyud to 5%. Now, let us look at this table here. The second table, this represents life insurance, no? um, whole life insurance. Okay, so on the first year of the insurance period, on the first year, the agents can receive 50% of the premium. So imagine how big the commission is. Okay, on the first year. And on the second year, it will also go down to 25%. And on the third year, it will go down to 5%. And okay, so that is how insurance commissions work. So that is how commissions work, no? So we're not surprised that some of the insurance agents, especially those who are very convincing when they sell their products, so they are really earning that much. Okay. Now, because we like the commissions, the computation of commission, so some of us would plan to start up insurance company or be an insurance agent. Okay, so I have here the typical steps, the typical process, no, and how to start up insurance company. Okay, so this may vary accordingly. No, this is just a typical example. No, so first, your company must be recognized by SEC. Okay, so all businesses that opens, it should be recognized by SEC. So, like us, we are required to open a corporation by the SEC. So we will be acquainted on what is the needed requirements. Okay, that is very important. Next is authorized to operate by the insurance commission, of course, because insurance commission regulates insurance companies. And then secure other licenses. So this one, secure other licenses, we have the mayor's permit, we have the building permit, and we have the uh, licenses to operate, and so on and so forth. Okay, and next is we get an appointment or a contract from insurance companies allowing us to sell their products. So for example, we are going to sell Sun Life Insurance. So we are going to focus on selling Sun Life Insurance. So we are going to ask an appointment or a contract from that Sun Life allowing us to sell their product. Okay. Next is get professional liability insurance. Why? Okay, because uh, professional liability insurance protects us from property damage and injuries. Okay, and so with the errors and omissions insurance. So this would protect us from errors we might done with the policy, the wrong name, the wrong premium being put there. So we are protected by the errors and omissions insurance. Next is acquire manpower. Okay, acquire manpower. This manpower should be licensed. So we talked about that in the previous slides. The people behind the insurance companies. Okay, so we just have to make sure that our people are with a good standing and the best in customer service, best in persuading, best in selling. Okay, and because it is important to start good in the business. Okay. Next is the startup capital. Okay, so according to the report of Philstar Global, most just recently, insurance commissions, insurance commission to cap minimum capital investment for insurance firm at 900 million. Okay, this is very big. Okay, so Commissioner Dennis Luna would make a recommendation to Finance Secretary Carlos Dominguez because Insurance Commission is under the supervision of Department of Finance. So the Insurance Commissioner would recommend to Secretary Carlos Dominguez to increase capital requirement. That would be all. Thank you very much for your time listening, and I really hope that you learned something from my presentation. Thank you, Doc. Thank you, classmates, and good day.